How the BoE decision impacts GBP, USD, and UK markets. The Bank of England (BoE) has recently announced a key policy decision, keeping its benchmark interest rate unchanged at 4% while slowing the pace of its quantitative tightening (QT) program. This move carries significant implications for the British pound (GBP), the GBP-USD exchange rate, and the broader UK financial markets. Interest rate on hold. In recent years, the BoE raised rates to combat high inflation. With growth slowing and inflation showing signs of easing, the central bank has decided to hold rates steady. This signals that future rate cuts remain possible, but they will be pursued gradually and cautiously to avoid reigniting inflationary pressures. Softer bond selling program. The QT program, which involved selling government bonds, was initially set at £100 billion annually. The BoE has now reduced this target to around £70 billion. This adjustment reflects a desire to maintain stability in the gilt market and ease concerns of excessive tightening. For investors, this is a positive sign that the central bank prioritizes financial stability alongside inflation control. Impact on GBP/USD. By holding rates steady, the pound gained some temporary support against the US dollar. However, if inflation fails to decline further, sterling could come under renewed pressure. At the same time, the global demand for the US dollar and Federal Reserve policy will continue to play a decisive role in the GBP/USD outlook. Economic challenges ahead. Inflation in the UK remains above the BoE's 2% target, forcing policymakers to remain vigilant. Growth momentum is weak, raising concerns about household spending and investment. External pressures, including a stronger US dollar and global trade uncertainties, add further risks for the pound. Conclusion. The BoE's latest decision represents a balancing act, fighting inflation on one hand while protecting market confidence on the other. In the near term, this policy stance could lend support to GBP, USD, and UK assets. Over the longer term, however, sterling's performance will depend on the pace of inflation, Federal Reserve policy, and the resilience of the domestic economy.